So anyway, I represent small to mid-sized businesses on a variety of labor and employment issues. Last time we talked about you need to hire someone and what does it mean to hire someone. And so what we're going to do today is make the assumption kind of all this stuff has to happen, what I would say, contemporaneously. So kind of when you decide to hire someone, you need to decide their wages, but because there's just a finite amount of time that we can teach each time, this is kind of the complementary. So let me share my screen and we'll get started. So a couple of the rules, if you have questions, we may be small enough, kind of raise your hand, and then Christy or Martha can kind of go, hey, stop for a minute, someone has a question. And then you don't have to type it in the chat box, but you can ask your question. Just keep in mind, I do have to be careful. I can't give you legal advice, but I can give you general ideas. So let's see here. Is this gonna, there we go. So today we're gonna talk about the famous AB5, independent contractors versus employees. There are a ton of exceptions right now, and there's even more that are sitting in bills. And then how that really works, as far as making a determination now that, do you really have an independent contractor? The next piece is once you determine whether you've got an employee, are they salary or are they hourly? And the legal terms are exempt and non-exempt. And what that basically means are, they're exempt or you don't have to track hours, and you don't have to track meal and rest breaks. And we'll go into that. We'll talk about what's called the duties test to make that determination and the salary. And then we'll talk about the exemptions for that. We're also going to hit the wage orders, talk a little bit, as I said, about the Fair Labor Standards Act, penalties. The other thing that I couldn't actually fit on this slide is we're going to talk about wage statements, a little bit of, how that plays out as far as minimum wage, piece rates. And so let's go ahead and get started. So for all of us, of course, Dilbert lived here, Scott Adams lived in the area. And what kind of set up the whole independent contractor issue many years ago was a Microsoft case. And basically that case looked at, you had people who were, hold on, my computer's like flipping around, sitting right next door to an employee, and that employee got shares of stock and they got benefits from Microsoft. They both had Microsoft pencils, Microsoft computers, they had business cards, and the independent contractors won on that and basically said, look, we're doing the same job. So that test lasted for a number of years until we had what was called Dynamax. And Dynamax, and you'll hear it said a couple different ways, Dynamax. It basically is a case that changed the way we make a determination in California on whether someone is an employee. And that case has great ramifications because there was a time period where you could go down the checklist, like over in the IRS has a different test, or if you're in EDD, there's a little bit of a different test. But it basically adopted what we called this ABC test. And that test, because it was in a case the legislature went ahead and made it a law with AB5. So you hear people talking about AB5 or this labor code section, which ended up getting into paper at 2750.0. So the question is, what is the ABC test? And it can be scary for a lot of companies because it's very rigid. And so we have the A, the B, and the C. And basically, the worker needs to be free from control and the direction. You can't come in and tell an independent contractor, you have to sit in this chair and you have to be here at this time. And you have to work Monday through Friday, 8 to 5. Or, you get the broom out and, we need you to use the red broom on Monday and the blue broom on Tuesday. That destroys that A portion. I'm going to jump down to C because you'll understand here in a minute. So the worker basically has a different trade. So I'll use you have a plumbing, your sink, your kitchen in the office is stuffed up and you can't get it open. And so you call a plumber. Plumber comes in, it's a different trade. It's not part of, and we'll use my office. The plumber isn't giving legal advice. He has what's called an independently established, meaning his own business occupation. When people come in to see me, I don't give them legal advice and plumbing advice, or it's not an integral part of what I do. So B is the hardest piece, and the reason why I'm spending this is because this is the one that people have a hard time with. And so, for example, someone, I'll use an architecture firm. Someone has an architecture firm, they say, oh, we're contracting with someone to do graphic arts, for our plans, when we put our blueprints together. Well, the problem, starts to become, is that is it an independent occupation? Yeah, you could say graphic art, but when they draw the house for you and put the colors in, that's an integral part of that architectural plan. I'll use myself as an example. I put together this presentation. Is, hiring someone to put together the presentation part of legal work? Well, it may not be legal advice, but if I'm using that on a regular basis, they're probably going to fall into some sort of marketing assistant or something to that effect. So the court came out and they said within this Dynamax case, basically there are going to be very few independent contractors as a result. And so they said, your plumber, your electrician. Now, that being said, the wheels came off the bus. And now we had exceptions starting to come out. So, if you're a business to business contract, so you sell landscaping supplies and you sell to a landscaper, not to the consumer, or you manufacture widgets, you sell widgets to Ford Motor. And then there's all these specific and exceptions as far as referral. And when I say referral, like for example, you have a tutoring app and basically you're matchmaking. I need a tutor, I go on this app, I need somebody at 7 o'clock and they match me with it. I see we have 2 consultings here. It was so good. Currently, let's see here. Here's more professional services contracts. That would be someone like myself. There's specific occupations like physician, a surgeon. You see the commercial fish industry. They got a lobby in it. Contractors, meaning a general contractor, a drywall contractor, if they have an exception. And so the reason why I bring this up is because if you fall into one of these exceptions, then you still have to prove whether you qualify under what's called the Barillo test. And that's that test that has all those, has their own license, has their own insurance. And that's the thing that people still remember. So what's the learning? If you can't figure it out, you probably have an employee. There is just a presumption in the state of California that you are classified as an employee unless you can prove otherwise. And if you feel like you can meet that ABC test, you need to document it thoroughly. Because if it currently I have, I'm working with a CPA where we're going through a situation where the EDD is now coming in and saying, oh, no. That person that you hired, to come in and they were working, on Mondays doing, whatever it was, filing for you. They aren't an independent contractor. They are a employee, and you owe the back taxes on that. And we're going to refer that to the IRS. Plus you owe the penalties when they do the audit. There's also some other new exceptions. I had someone call me. There's going to be an exception that's in a bill right now for community theater, like bankhead, people that only work. So we'll see more and more of this. I think this law was bad. That's my own personal opinion. So, all right. So now I've kind of said, everybody's an employee. Do you make them exempt or do you make them non-exempt? And so this was always really a hard concept, because I think because of the legal terms for me to get, but it's basically, is someone salaried or someone hourly? And we have a tendency to use those terms very loosely, but exempt and non-exempt, which kind of line up with those two, are very, they have very specific legal meaning, and they also have tests that you have to meet to become that. So what I want to try to do, we'll see how this works, is I want to take you so you have this in your, let's see if this works. That was, it stopped sharing. Why did it stop sharing? Let's see here. So I am, so what I'm going to do is take you to that site so that you can look at this on your own. So the, can you see the slide that says Department of Labor on it? Okay. So the Department of Labor, we have to start at the federal level. The federal level is Department of Labor, and then it's the Fair that's where we get FLSA, Fair Labor Standards Act. And basically, this is a fact sheet that you can get, if you don't want to write all this down, if you email me, I'll just send you the slide presentation and you can click through. But it basically sets out what the test is. So there's a test, a two-part test, and it's called a salary and a duties test. And so we're going to start with the duties, and we're going to look at that a little bit in depth. But you either qualify under one of four bases. So you can see here, we're going to look at the executive, administrative, professional, computer, and it starts to talk about, okay, how much do they have to earn? That's the salary side. And then we look at, You know, are they managing? And we'll get a little bit more into this. But our test in California is based off of the federal test. And so, you know, when you start that analysis, that's the first piece you need to do. The next piece you need to do is you need to go to, so now I'm going to stop for a minute and you can use your little button. And so I want to ask, how many of you know, you can put it in the chat, how many know what wage order you are covered under in your business? And if you don't know, then just say, I don't know. A lot of times, so I'll pick on Kathleen. Kathleen, do you know what wage order you are at Legacy?
I have both, right? And I actually I have salary, I have independent contractors, and I have hourly employees.
Okay.
Is that what you're asking me?
Nope.
Oh.
That's all right. This is hard. Let's see what we got. We got, most people will say, I don't know. So in California, so let's see here. Yeah. So you should see a website that says State of California Department of This is where we kind of put the test in a document. So every single profession in the state of California is governed under some sort of wage order. And we'll look at the most popular, and it's wage order 4. And so we'll click on that. You should see something that comes up, wage order 4 now. Okay. And basically it is a document, number 1, that has to get posted in every little kitchen or wherever it is that you put those things. And it talks about, as you can see, I can make this even bigger. You can see that it talks again about what in the California does it talk about executive exemption. And here's the reason why it's important. And I'm just scrolling through this because I'm going to stay. It talks about who's an employee, who's a professional, what are the rates for overtime. Every single wage order can be different. So that's the next piece you have to figure out. You say, great, I didn't even know what wage orders were. And now you're telling me I've got to figure out how to do it. Well, here's the trick. So, all right. So in the state, it says, this is from, if you look kind of at the top, it's from the Department of Labor here in California, the DIR. And it says, what wage order are you? And so you go down here and it has all the wage orders and you think, oh my God, this is 47. So we're going to use Kathleen again. So we'll do this easy. So we'll do real estate and see if you can see, it says real estate office, brokerage only, see order number 5. If it includes property management, then see, here's the wage order. And so you just go through and you look to see. Now this one says you're 4, because if you're only a brokerage, but you have agents, then you have to look at them closely. If you happen to be a sheep herder, then you're wage order 14. If you do ship repair, you can see you're number 9. Ski lifts are 10. So the point of that being is every wage order was back on that first page on the state let's see. Copy. So we'll go back over here. So you go back again and you kind of figure out, okay, where is it that I fall into? So in wage order 4, you can go in here and you can now start to figure out, okay, what's my rate of pay? You know, what are the requirements as far as I'm going to make a determination, because where we are in this course is we're going to make a determination whether you're exempt or non-exempt. So everybody confused? Everybody kind of know what you're supposed to do with this? I want to pause at this because this is an area that people kind of get confused on. So let's go back to, let's see. Okay, so you should be able to see my slide now. So we talked for a moment. Do you see my big slide or?
No. Kirsten, yeah, we don't see the slide at all.
Not at all. Okay. Let's see. That's because I'm going back and forth. Big slide or 2 slides side by side?
2 slides.
Okay. That would be because, yeah. Okay. So
There we go. That's good. That's it.
So we have 3 specific exemptions: an executive, we have professional, we have administrative. Now there's some other ones, there's commission sales and computer, but most people don't necessarily have that available to them. But these are the 3 that are used the most. So when you look at it, there we go. Oops. So on the executive, you know, you're looking at what kind of duties is someone doing? Do they manage the company? You know, someone that's the CEO, the CFO, you know, that have the capacity to make financial decisions. You know, they're directing people. This is not going to be your store manager. This is not going to be, you know, the supervisor or the foreman. This is, you know, a high level, what they have a tendency to say, like the C-suite people. In a small business, it's usually typically the owner and maybe someone else, like I had said, like a CFO. They hire, they fire. And the key to this is all of these, but have this, but they exercise discretion and independent judgment, and that impacts the bottom line. It can have financial consequences. So that's kind of the duty test. The salary test is has changed each year, and it's basically 2 times the minimum wage. And so if you're a small business, everybody know what the minimum wage is this year? We're going to look at that, but it's 13. So administrative, you'll see, are very similar, but those individuals, you know, exercise discretion also. They help the CFO directly. They help the CEO directly. They're performing non-manual work. So this potentially could be like a manager of a store. You know, they don't own the store. They don't, you know, they report up to the CEO, but they are doing some sort of assisting of the manager. So in a larger organization where you might have the CEO and then you have a director of operations and a director of marketing and a director of branding, this would probably where that person fits in. And the next exemption is the professional exemption. And so this would be where I fall in. You have, people that have some sort of license, a doctor, a podiatrist, a dentist, but it's very limited. So while your contractor, your electrician falls into a license, they will not fall into this category because it's what's called a professional occupation. And there's specific ones, as this says. And so what, at the end of the day, what makes them different? They're in some sort of learned profession. So they go to school after, undergrad, and they get an additional training on top of that. And it's in science or it's in some sort of prolonged course of study. And basically they're saying these people have received the education and the knowledge, and they get as part of their education some knowledge about, how to operate in the world, versus someone that comes out of high school that may not be familiar with the business world. And we're saying, wow, you're sophisticated enough to protect yourself. You're probably going to be making way more than, double minimum wage. And so, and again, they exercise, discretion and independent. And again, it's 2 times the minimum wage. So since we're talking about minimum wage, and again, that's the salary part of the test. This year, $13 for anyone that has 25 employees or less, and then it goes up to 14 next year for 25 or less. So, and those numbers are calculated. For example, I have an company that is nationwide, but they only have 12 locally. So then there's a way that you have to calculate that from, there's a method for counting. And that's for any sort of law, that governs the workplace. There's, we'll say a threshold, unless it says, everyone must, it covers everyone. All right, so here's a warning. So every single city has the potential to have their own minimum wage. And so, San Francisco has a different minimum wage. And they have, so if you send someone in, so if I worked for a law firm and they sent me in to work in San Francisco for 2 weeks, I had a trial in there, the company would have to meet the minimum wage that was in that location. Half Moon Bay, Oakland, San Diego, Berkeley, in the area. So you do need to watch that when you send staff into other areas. I find that happens more with deliveries, and it happens where someone's going to a site. So for example, I have an accounting firm, and they regularly send their junior information gatherers out to, they go and pick stuff up, and they might be at a client's site for, a couple hours gathering papers. You have to watch and make sure that you're paying at least whatever that minimum wage is where they're at during that time period. So I want to talk just quickly about different types of pay. You know, we have a tendency to think, oh, I'm going to incentivize the person, if you pick 50 baskets of strawberries, or you make 20 little widgets, or you are able to sell X number, then we'll pay you on that. I want to give you a little bit of a caution on that. And the reason why is because the person needs to make at least minimum wage. And when they're doing other things, so they're not, let's say we'll use hair cutting as an example. They get $50 per head when they cut hair, but 25% of the time they're sweeping up the hair on the floor, and then they have to go do the towels, and then they have to get the shampoo and restock it. They still must be paid for that what's called non-productive time. And they also have to get paid separately for what are called rest breaks. Again, and there's a method for doing that. So if you're using piece rate, that is an area that is highly litigated. And a lot of this presentation today are all items that are litigated highly, and I'm trying to hit those. If you have no clue, then you need to give me a call and I'll help you through that. The other type is what are called incentive pay. It can be any type of pay that's in addition to the regular wages. Someone makes $15 an hour, plus they get tips. You can have tip pulling, but you cannot have a manager or an owner sharing in those tips. If you work somewhere where there's an auto tip or a gratuity, I've had issues where there's been we'll call it an administrative fee. And the question is from both a franchise tax board, and then from a wage and hour or litigation standpoint, those might be a tip. So if you are doing that, you need to look at that. You can also have bonuses. The reason why all of this becomes important is because when you are calculating perhaps the rate of overtime, bonuses come into, or those wages come into what the overtime rate is. It's called a weighted average. So if you're paid $15 an hour, normally your time and a half or your overtime rate, not double time, would be $7.50 plus 15, because that's time and a half. So 20 to 50. But if you get a bonus of $1,000, that changes that mathematical calculation. And again, if you're not sure how to do that, you probably want to check in, and I can kind of give you an idea. ADP also has, if you use ADP, they have a little brochure on that. Commission agreements. If you are paying people by commission, you need to have a written agreement on what that commission is and how it will get paid, what happens upon termination, are they entitled to commissions after they leave for any reason. Split pay or split shift. What happens is when there's more than an hour, other than the 1 hour meal period that is separating the time. So someone works from 11 to 2, and then they come back and work 4 to 9. And that's very common in restaurants. Technically, if the employer is the one that's commanding this, then the employer owes what's called a 1 hour split shift pay premium. And it's a minimum of an hour, whatever their hourly rate is, due to that. Now, if the employee is saying, look, I don't want to come, I'm not going to sit here, I want to leave, there's a lot of things, but the key to all this is getting it documented. So someone can't come back again and say in the future, well, you made me, have this split shift. We have what are called reporting time pay, and it basically is saying you aren't going to have someone to come to work and show up at 7 a.m. and there's no work for them. If you do that, then you owe what is called reporting time pay. And it's basically if someone was scheduled 4 hours and they show up and you go, you know what, I don't need you today, you owe them at least 2 hours of pay. If someone has the day off or they work 3 to 11 and you have someone come in for a 9 a.m. meeting and it's a 1 hour, you do have reporting time pay requirements. It does not apply when you have like a threat to a property, or we have a flood, or PG&E, you have no electricity or water or services, things that aren't in your control. There's on-call pay. This one can be a little bit what I would call a lot of people do it. I'll see them say, call in tomorrow night. I'll tell you whether I need you tomorrow. That's not necessarily on-call pay, but you do need to be very careful about how you use it, because you could end up having to pay reporting time pay. The test I have up on the screen, and I'm going to give you an example of many years ago, when I was young and frisky, I was a nurse and I worked in the operating room, and it was very common that we would be what is called on call. And so when we were on call in the hospital, we had a sleep room, then we would make our regular rate, so that if you came in, and you were in a car crash, there was a team of operating room there. I've worked in other places where, I had to be within 20 minutes of the hospital at all times. And then I would get so much per hour for carrying, back in the day, a beeper. And then I had to be able to respond and be back into the hospital within a certain amount of time. Typically, it's not used quite as much in some of the industries that are attending the conference today, but you may have like an IT person that you put on call that is going to respond. There would be some level of standby pay that the employee would need. The next one that gets people into trouble is deductions. So when you get someone set up on payroll and you've hired them, you want to make sure any sort of deduction that you're taking out of their pay, that you have written consent. 401k, you have insurance premiums. If you have an employee where you loan money, which I'm not too excited about, then you need to have it in writing that they borrowed the money from you and what the payment plan is, and that you can deduct that, and it shows as a specific line item on their wage statement. If somebody breaks something, and again, normal breakage, you have a tray of dishes, someone's carrying it and they trip on the mat and they break all the dishes. You cannot charge an employee for that. On the other hand, if the employee's in the kitchen and they're now playing Frisbee with the dishes and they're up against the wall and they break, 20 place settings, that is a willful act, or what's considered gross, negligence. If you have overpaid someone, then what I recommend that you do is you acknowledge, and you need to do it in a very timely. You can't go back 3 years and go, oh, I overpaid you. The law is not going to look very kindly on that, because your job as an employer is to monitor that on a regular basis. But as soon as you discover it, then you enter into a written agreement. The employee acknowledges that they've been overpaid by $200 and they pay $10 back each pay period, or whatever it may be. Timely payment of wages is key. Regular paydays, non-exempt or hourly employees need to be paid at either every 2 weeks or twice a month. An exempt employee or a salaried employee can be paid one as what I just said, or as little as once a month. You need to post when the paid date and where it's going to occur so that they can pick up their checks. And also, if it falls on a holiday, the holiday is listed in the government code. If you're not sure, then you pay the day before. The code does allow you to do it the next day, but if you're not sure, you need to look it up. Here's the next big thing that everybody goes, well, I have ADP, I have paychecks, I have, benefit mall, they do my, everything's right. These items need to be on every single pay stub. So and there's nothing magical. I've had clients who give their employees cash. If you give them cash, then you need to have them sign that they've been given cash, and then they still need what's called an itemized statement or a pay stub or a wage statement. Whatever flavor you want to call it, needs to have what the total gross wages were, how many hours that they worked during that pay period, any deductions, what was their net, when was the pay period and the pay date, the name of the employee. A lot of these are curable. The other one that gets people is the employer name isn't on there and the address. There has been some case law that has come out recently that says, for example, if you are Safeway, but your real corporation name is ABC Food, distribution, that, previously it had to have ABC on there. Some employees wouldn't recognize it as that, but I recommend having the full legal name on there. What are the applicable rate and the piece rate? One of the questions I always get, well, what about sick time? Should I put sick time on there? Should I put vacation? There has been some discussion that does not need to be on there, but if you don't put it on there, then you need to give a report on an annual basis, or on a pay period basis, how many hours of vacation they may have if you offer it, and of course, how much paid sick leave that they're entitled to. But if you're using a payroll service of any kind, just put it on the payroll pay stub. Tools and uniforms. This is another area where, people say, oh, they made me use my cell phone. I had to call in every morning and check what my schedule was. That's every single case that I've had for probably the last 4 to 5 years has been, I use my cell phone for work. So you really need to examine that. If that's, do you make them wear a uniform? Do you make them wear steel-toed shoes? You may have to reimburse them if you're making them buy special things. If you give them a shirt, then, you shouldn't make them pay for that. That's something that you give them, like if it says, Livermore Chamber, everybody has to wear, a shirt from them. I have zipped through because I want to allow enough time, for questions. I know this was jam-packed. The next class, I believe, is in September. Is that right, Martha?
Sorry, let me look right here. It is August, I believe.
Okay. And so it will cover maximum hours, meal and rest breaks. There's a case that just came out within the last 30 days that talks about rounding and meal and rest breaks. The obligation of the employer. We're going to see a lot more meal and rest break cases that are going to go in favor of the employee. Overtime and alternative work. So, all right, I'm going to stop sharing, and then you guys ask questions. Things that, can I answer a question about meeting time? Yes.
Sorry, I had to get the unmute button. You said something about the meeting time, but I didn't quite get what you meant. So if you ask an employee to come in on a non-work day for a meeting, and the meeting is 1 hour, do you pay them for that hour, or do you have to pay them at least 2 hours for coming in?
At least 2 hours.
Okay,
If it's a
thank
man
you.
meeting.
Thank you.
What else?
Kirsten,
And
I have a real quick question.
Okay.
So during this pandemic, do the hourly, I mean, like the exempt, non-exempt, and clocking in and out requirement, it's been a little rough since some of the time they're working remotely. And currently we're remote only part-time into the office, but they're still working full-time. So is there temporary orders that are in place for the pandemic, or
No.
specific questions I'll email you?
So no, that would be one area. There were no, there were a number of different things that we were disappointed the labor commissioner came out. But basically, as far as timekeeping requirements for an hourly employee, no changes, still have to track. Exempt, you can kind of let them loose. It's kind of like letting them out in the pasture.
Yeah.
Just run, but the hourly employee still needs to track their time and their meal and their rest breaks.
And then are we still under the portion for the COVID, that the extra 10 days if they had symptoms for COVID, it's like extra sick leave? I know we've talked in the past, I had someone abuse it and we dealt with that, but is it still carried over into 2021, or did that end in December?
No, so that is still in place. So
Okay.
what has happened is there's an intersection, and I'd have to have the law in front of me, but there's an intersection of both the federal law and the state law that have come together. And we also have what's called an expansion of the California Family Rights Act that applies to anybody that has 5 or more employees. And I think, Kathleen, we had talked about that. We could see that happening. And so in a way, the COVID, if someone goes out, they have that protection, but they would also have, I believe, I don't know if the reimbursement's coming from California right now, or if it's coming from the federal government, that if you have someone that goes out on like a positive COVID test, and you pay them their salary, I believe it still is a tax credit situation. So you're getting it back in tax credits.
Okay, thank you. And I wasn't paid for this next statement, but I can tell you that if you have any questions, hire Kirsten, because she has saved me through 2 employee disciplinary problems that could have turned into lawsuits if I didn't have her ahead of time guide me through them. And one of them was through COVID and had to do with taking time off over and over for COVID tests. So, I mean, it'll save you, it's a little bit of money up front, but it'll save you thousands in the long run. So she didn't pay me for this, but I highly recommend her. Even if you just have quick questions, send her an email and retain her for, onesie an hour or 2, and she'll help you, because I was a little lost.
Thanks, Kathleen. That's good. Good to know.
And I my background, Kirsten knew me. I came from Waste Management, which was a corporation, which was ran with unions, so much different than a small business. And so, yeah, she's good for help there.
Kirsten, can I ask another quick question?
Sure. Go ahead, Maria.
I wanted to ask about unauthorized work time. So what I mean by that is if you have an employee who has a scheduled shift and they come in 10 minutes early and clock in 10 minutes early or 15 minutes early, it throws all my breaks off, and then, you know, lunch breaks and things like that. And I'm wondering legally how to handle that. I'm sorry, I know you can't give legal advice, but I guess I'm trying to figure out if that is acceptable or non-acceptable.
So I think, you know, we're going to talk about, you know, rounding, and I think employees have, and I've been there where you know, you had to clock in. Employees are nervous that they don't want to be late. They're scheduled for 9 o'clock, and they don't want to punch in and it say 10:01 because then they get disciplined for that. So, you know, if they clock in early, you do need to compensate them for that. So what I hear, unless it's different, it's it's managing that employee, saying, I understand you don't want to be late, but I'd like you to clock in, you know, no earlier than 5 minutes, you know, somewhere between, you know, 9:55 and 10 o'clock, but don't, and I'll pay you for that 5 minutes. But, you know, I would tell you that it's something that you need to manage as the employer.
Okay, thank you.
I know that's not a very satisfactory answer.
No, it actually helps because not to take up too much time here, but it helps to be able to tell them, okay, you have a 5-minute window that's acceptable. More than that 5-minute window is like, you know, because it's as crazy as, well, I got a ride, so I'm 20 minutes early. Well, okay, but you can't clock in 20 minutes early, like go to break room, have a coffee, hang out. But yeah, so the 5-minute window is very helpful. So thank you.
And I think, you know, you do need to be careful. There's an industry where, you know, they have made, it's called bench time, and it's in the car wash industry. And so you do need to be careful that, you know, they can't come back and say, well, you know, you had me clock in, but I couldn't, you know, there was no work and you didn't pay me. So it's about managing that time that they clock in.
Okay, so even more reason to clock in closer to their shift
Yeah.
time. Okay,
Yeah.
thank you.
Any other questions? I know we're at 10 o'clock. I want to be really respectful of them.
Kirsten, I see a question in the chat from Rhonda, and she's asking, what is the website? And this was earlier, so that may have been answered. Rhonda, are you still there?
Yes, I see her there. So if it's my website, it's www.barrantilawgroup.com. My email address is my first name, Kirsten, Kirsten, didn't have an E and an N, at keblawgroup.com. And there we go.
There we are. And I'm sorry, tell me your website again and I'll type it in.
So it's identical to the back end. So keblawgroup.com is the website. Any other questions?
Anybody?
Hopefully this wasn't too confusing. So all of you should know now what your wage order is. And when you look at your wage order, it's going to talk about meal breaks, rest breaks. It's going to talk about all the exemptions and how to make it determination, you know, how to fit that in. It's like this, and just for those of you that are older, this has not been around forever. This came around like in 1999. It's been so long, I don't remember for sure. It came about as a result, I think, of AB 60. And the reason why it's important, like I have a case right now where we have a class action. There's some things that are in that wage order that under the CBA, the union contract, will not apply. So And some of the wage orders, like sheep herders, they don't have to get breaks, the sheep, there's all kind of weird little things that are out there. They can stay overnight. You don't have to compensate them for, their lodging, but no other questions? Well, hopefully we'll see you in August, and we're going to do the back end part. If you're unsure, just keep in mind that this presentation was kind of like, this is the traps for litigation. This is what I see when I get a complaint, is you're not able to follow that. So if I've made you very confused, then you might want to call me. I apologize for that.
A lot of information. Thank you, Kirsten.